Hello, good day, every one of you. Hope you're all doing fine. Johnny Dev here. This class, I'm going to be revealing to you my trading strategy, how I trade the financial market. So it's an expository class, and you're all getting it for free. So we'll be considering a very popular and very known concept in financial trading, break and retest concept. So you may be familiar with it, but there's so much to trading break and retest. So it's a concept in technical analysis. So before we start, let's go to Investopedia and have a background understanding of what break and retest concept is all about before we dive into the main thing. So what is a breakout concept? A breakout is a stock price moving outside a defined support or resistance level with increased volume. A breakout trader enters a long position after the stock price breaks above resistance or enters a short position after the stock breaks below support. Once the stock trades beyond the price barrier, volatility tends to increase and prices usually trend in the breakout direction. The reason breakout are such an important trading strategy is because these setups are the starting point for future volatility increases, large price swings, and, in many circumstances, major price trends. Breakouts occur in all types of market environments. Typically, the most explosive price movements are a result of channel breakouts and price pattern breakouts such as triangles, flags, or head and shoulders patterns. As volatility contracts during these time frames, it will typically expand after prices move beyond the identified ranges. So the saying is true that says that this particular paragraph that said the reason breakout are such an important trading strategy is because these setups are the starting point for future volatility increases. And I'm telling you, this is the edge that we're all looking for in trading. The starting point for future volatility, the starting point of a price movement. That is area that I personally target. I enter trade from the grassroots, from the beginning, from the onset, from the starting point. And trading break and retest concept helps me a lot to identify the early stage of price movement, and catching the trend early or catching the move early is all you need to make money in the market. Don't make the mistakes that most typical traders do. They enter markets when the real traders are taking out their profits, and you enter too late in the market. You discover that you enter the market and already price begin to reverse against you. Why? Because failure to identify the beginning of that price movement. This will be like an insider class revealing to you all about this stuff. So let's go to the main thing, break and retest concept. So for us to identify areas that we'll be looking for the breakout to take place, we have to identify our key levels. So I want to dive into key levels. So what are key levels? Key levels, also known as support and resistance levels, are significant price levels on a forex chart where traders expect a reaction. These levels represent areas where the price of a currency pair is likely to encounter buying or selling pressure. So simply key levels, they are just normal support and resistance, traditional support and resistance that you know. I identify key level in a little different way. The main goal, remember, is to make money from the market. So if I see that doing things my own way gives me money, why not? Definitely I'll continue to do it. So in identifying my key levels, I identify my key levels based on, let me pick out my tool. Yes, we have support and resistance. So in identifying a key level, we have multiple touches here. So we mark out our zone. So we have key levels. So these two form our key levels. So this is now the key level that we're looking for. The resistance is here and the support. So in trading breakouts, these are the basic concepts that you need to be successful in trading break and retest concept or break and retest strategy. This is personally how I trade. I don't trade anything other than break and retest. So I'm revealing this, my secret strategy, to you. So after identifying support and resistance at key levels, also there's another key level which I personally discover. Let me draw the diagram for us here. That's previous high or previous low. Also to me is a key level because I trade off of it In fact, I use previous high and low as my key levels more than I use support and resistance as my key level. Now let me tell you why. Let me draw it for us. Let's take, for instance, price created a high, pull down, create a low, and let's say this is our current price. Price is currently here at 102.299. So where is our previous high and our previous low? So to identify our previous high, this is just the previous high, of course, as you'll expect. This is our previous high. Also, this is our previous low, most recent low. So these are the areas that we're interested in as a key level also. Personally, these are my best trading zones, the previous high and the previous low. So this is a key level, this is a key level. Support and resistance as our key levels. Also previous high and previous low as our key level. Now we want to consider another factor, the weakening of support and resistance. Because guess what, I'm telling you, support and resistance weakens over time. That's why as a breakout trader, you save yourself a great deal of loss, because when a resistance or support has been tested multiple times, I'm telling you that support or resistance will get weakened. The more a resistance or support is being touched, the less strength it has to reverse price. So that's why I don't trade support and resistance, because you don't know when breakout will take place. So let's say that price has not yet broke this level. Let's say that we are still here. So, and you identify this support zone. So of course, based on what is being taught on the YouTube and all these traders that you follow on YouTube, they will tell you that yes, this is a very strong support, so you should be looking for buys. This is a very strong support that has multiple touches. How many touches? Let's count.
We have 1, 2, 3, 4 touches.
So it's a very strong support. So you went ahead and you bought from here, and boom, this is a losing trade for you. So multiple tests of support before breaking down. When support has been tested multiple times, it weakens. Just as when you are knocking somebody's door and you want that person to open the door for you, you will knock at the gate. The first time he didn't open, by continuous knocking, he will eventually yield and open that door for you. It's the same thing with trading support and resistance. That's why personally I don't trade support and resistance. I only use support and resistance as a key level, which I wait for price to break out before I will trade in the new direction of the trend. When a price have set up a new swing, then I catch it early. So that's how I personally trade support and resistance, and only use it as a key level. So now let's consider the breakout concept. So in trading breakouts, it's very simple. Once you identify your key level, so that key level, as we discussed, it can be your support and resistance levels, or previous high and previous low. Once we identify our key levels, then we wait for price to break above or below our key level. So either of these, the trend is your friend. So this is a consolidation phase, price bouncing off resistance and bouncing off support. So if price should break out, upside breakout, we know that yes, there's a shift in trend, there's a shift in price movement. Or if it should break downward, there's a shift in downward movement. So once the breakout has taken place, we'll now wait for a pullback into this key level, so which is a resistance that now turns into support, whereas supply zone here that turns into demand. So this is a swap zone. I like trading off of a swap zone. I like trading swap zones. So from this place, we'll now be looking for some confirmations, and then we catch the new move. So that's how I personally trade breakouts. Whereas wait for price to break below, then we counter it, wait for pullback for some confirmations, then we enter, and boom, we take our profits. So now what I want us to consider is we have takeouts. You can see price may break a little above your zone, your key level, yes, or your zone, and you may think that yes, this is a breakout, and before you know it, you will see this. So after all, maybe you have opened your buy position here, You're thinking that yes, this is a breakout, put your buys here, either you buy limit, you place your buy limit or entry by market order, and look at what would have happened. You could have been liquidated. So why? This is what we call fake out. So how do you know now? How do you identify whether a breakout is a fake out or really is a breakout? So this will be our next lesson to discover. Follow up with me as we dive in.